Welcome to the Lazy Investors Plan for investing in a bull market in crypto, which we fantastically have again. And we're going to do this without overtrading, without sending yourself crazy, watching the screens all day, and without using leverage that can wreck you and blow you up. So what I'm going to show you today is a simpler plan. Not everyone wants to be me. Like, I'm in here grinding these markets out all day, every day. I wake up in the middle of the night and check the markets. I check the markets first thing in the morning. I've got automated systems. I've got other systems. I'm all over this. That's probably not you. I'm probably a little bit strange, and you probably don't want to be me. You probably should be happy with 80% of the result that I get with the smallest amount of effort. And where are we going with this? You can be like most people and try and, sell out here, buy here, sell here, buy back in, sell, buy, sell, buy, sell, buy, sell, buy, sell, buy, sell, buy. You're not going to get every one of those. And every one that you miss, you sell here, you feel really clever, you miss this buy, and now you've got to fall in, now you've got to chase here, and then you only just bought back in, so you don't want to sell out here, and it's all thrown to pieces. No one's good enough to do this. It feels like we're good enough to do it. I'm not good enough. You're not good enough. Give that shit up. If we look at the green line as what crypto can actually do, what can crypto actually do? Well, 5 years ago, I couldn't really do very much. Now it's starting to get like you can do lots of things. You can take coins and borrow 100 million. If you've got $200 million worth of coins, you can borrow $100 million in cash. You can do that automatically. You can do a lot of staking things and earn yields. You can, there's a whole pile of, my point is this, crypto gets more and more useful and more people use it all the time. And whereas 5 years ago saying, I'll send you crypto wasn't a big thing, now this is reasonably commonplace. Like my business gets, 5 or 10% of our revenue from people paying in crypto, and that's going to go up over time with wiggles. Now, what happens is that people get excited in the hype cycle. Like we've got a hype cycle in AI right now. So AI is way overvalued. People are overvaluing the potential, and then they'll undervalue it. And then they overvalue it and undervalue it. And this is what happens with crypto. In 2017, people really overvalued it for where it was. In 2019, people had really undervalued for where it was. The end of 2021, people had kind of overvalued for where it was. And a couple of months ago, people had really undervalued. So what should you be trying to do? The buy part is pretty simple. You should buy anywhere where roughly, broadly, you can say either people hate crypto or they in the very recent past used to hate crypto. So you should be trying to buy things somewhere in the zone where people hate them. Now, the selling is a little different. I know we'd like to think that we're going to catch the peak bull and sell out at the tippy top, and I've never done that. Maybe you're better than me. I don't think that's a realistic goal. What we probably want to do with selling is wait until a little bit past the peak. A little bit past the peak, we have a really, really good idea of what that should feel like. It should feel still very, very bullish. It should feel, the time that you should sell should feel like a buying opportunity. It shouldn't feel like crypto did 6 months ago with like, oh, I hate crypto, that's fucked. Oh, sorry, I got into that. So the bottom line is, as crypto grows over time, it is doing this. We want to buy somewhere in the zone of people either hating or just off hating crypto. And we want to sell a little bit past everyone's talking about crypto, everyone loves crypto. Now, my friend and our director of research, James, says, at some point, you just have to take your pants off and join the orgy. This is what bull markets are. You just take your pants off and just get involved. This can be really difficult for smart people. It really can, because you're aping into sketchy investments, high-risk investments, buying things just because they're going up, a normal person, a sensible person would feel a bit weird about that. If you wait until you feel confident, until you feel certain, until you feel safe to do this, you've missed this part and you're somewhere in the zone of here. You're doing it too late. You don't want to wait until you feel confident. The ideal time for buying into crypto for a bull market is right when you're a bit like, oh, this is a bit sketchy. Oh, I don't know about this. This is, oh, I'm glad it's just a little bit of money. I'm not putting serious money. You should feel a bit ass pucker is my point. So in today's presentation, you're going to discover a simple method for investing in a crypto bull market that gets you most of the results of my complicated methods and my complicated systems, but with a fraction of the effort. And that we're going to get to a mechanical method for exiting your positions that doesn't rely on that kind of nonsense where I like this coin, I hate that coin, someone's drawn a bunch of lines on charts and like I've got some technical analysis that says that Bitcoin's definitely going to go to here, because that stuff, it's wishful thinking, guys. You know, that's all fine and dandy, but you don't want to bet the farm on it. Next thing I want you to understand is that bull markets are very, very different. They're different psychology, and they trade differently. They act differently. They are more predictable. Technical analysis works really, really well in a bull market. It doesn't work very well in a bear market. The main game, the 80-20 of what we're doing here is to get and keep risk on for as much of the bull market as you can handle. And paradoxically, in a true bull market, you have to hold as long as you can. The time to get out is when you're feeling some variant of shopping for real estate. Fuck, I could quit my job and do this full time. Wow, we're so early. Your friends are starting to look to you as an authority on coins. Like any of those sort of things, those are all big red flags for later. But we're not there yet. We're fingers crossed, a year to 2 years away from that, maybe even a little more. Now, this is a quote from the most successful stock trader of all time. In the 20s, he made $100 million, and then in the 1920s, and then lost it all, and then made $100 million and then lost it all, and made it a third time. Was one of the richest people in the world, one of the 10 richest people in the world, and then he lost it all and went broke and killed himself. Best trader ever. And his idea was that he waits for a bull market and he's getting on and he's just riding for the whole bull market with up and down around a core position, but he's going to try and hold for the whole bull market. Now, in a bear market, bullish setups really look great, but they don't work. In a bull market should be constantly faced with a stream of bad news. And you look at the bad news and you go, oh man, I better hold off. Like that's a bit sketchy. But it never makes the market turn down. So there's this saying that bull markets climb a wall of worry. A wall of worry. You should, if you're in a bull market, have ample reasons not to invest. You should have always ample reasons not to get involved. Now, you can reduce the difficulty here just by a little bit of acceptance that there's going to be swings up and down. Your account's going to wiggle all over the place, but the long-term trend is your friend. The primary job of a bull market is to shake you off, and it's a bucking bull. It's a bucking bull. This is why they call it a bull. It's not a bronco, it's a bucking bull. The implications of that are surprisingly deep. The bull market, let's look at so we can see our bull markets here and here and just starting here. You can see that along the way, this doesn't look like a big deal now. But that day would have looked like a big deal when it happened. That would have looked scary. This doesn't look like a big deal now, but this was a big move. That would have been a big, big, big shakeout. This would have been a big shakeout. Actually, let's look at it on BitBook. This will be easier. This was a big shakeout. This is a big shakeout. This is a big shakeout, big shakeout, big shakeout. This was an incredibly, looked like it was all over for a minute. And then we're back. We're so back. We're so back. It made new highs, confirmed the highs. It's so over. You can see what I'm getting at here. You have to survive. If you're here at the start, and you are here at the start, and you're here at the end, when we're up here, you're going to make money. As long as you don't get shaken out along the way. You don't want to get too cute trying to time every little wiggle. If you get the big things right, you're going to do much better than someone who's over trading and who tries to catch every move. Really important point. So the main point here is don't try and time the market unless you're an expert. Have time in the market. Try and get in close to where people hate it and try and get out close to where people love it. Don't use leverage and unless you're an expert. You shouldn't. I barely use any leverage, barely at all. And don't short unless you know what you're doing. Shorting is not just the reverse of going long. Shorting is much more difficult than going long for a number of reasons. So most of us aren't experts. I'm an expert, but I've been doing this all day, every day for like 15 years. We need to embrace that most of us aren't experts and realize that owning crypto all the way to the eventual top, that's going to get a better result for most people with a fraction of the work. So what I have here is a very simple strategy. We're going to use part of this in our system today, but this is very simple. I've got the red line is a 64 period moving average. The blue line is a 256 period moving average. While the red line is above the blue line, we're going to stay invested. And you can see how this would have worked. Would have got us in off the lows, a fair bit off the lows, but we got the big chunk and we got out. We got out late, but we got a big chunk. This is a achievable goal. This is an achievable goal for everyone. And this kind of thing, I'm going to show you something a bit more sophisticated than this today, but this kind of thing is good enough. Like if you get some risk on now and you get some risk off there and we get a bull market, well, you're laughing. Next question. How many coins should you own in your portfolio? So more coins in your portfolio is more chances to get a big winner. But more coins in the portfolio is the less impact of having a big winner. So if you have 10 coins and you have one big winner, okay, you've done okay. If you have 3 coins and you have one big winner, wow, you're rich. If you get 100x and it's got a third of your account's up 33 times. For most people who are very small accounts, 5 to 10 coins, probably 10 coins is the sweet spot. If your account is very, very small, you need more concentration. The fewer coins you have, the more luck you need, but the more impact that luck has on you. Luck works both ways. It works good and bad. Next question. Should you own big coins? The Ethereums, the Bitcoins, the Solanas, the stuff that everyone's heard of? Or should you have small moonshot bets? Now, this is a really good question. And the truth is that there's nothing for free in the markets. So smaller coins are riskier, but if that risk pays off, it pays off bigger. And so we want to, if you don't know what to do, having some in each camp is usually a good strategy. So you want some larger coins and you want some smaller bets. And the actual coin names don't matter that much. Like we're going to get to how to select coins, but it doesn't matter as much as you think it does. Next question. Should you own Bitcoin and Ethereum? Well, Bitcoin's at $38,000 today on 18th of November as I'm recording this. I think in a really strong bull market, Bitcoin might get to 200, possibly 300. And I'd be happy with 150 at a bull market. So that's a reasonable profit. An investment banker would be happy with that. A big hedge fund would be happy with that. Probably someone with $1,000 account isn't going to be happy that they've turned their $1,000 into $3,000. Probably not. The upside is limited if you own Bitcoin and Ethereum. So if you're starting out with a really small account, like a $1,000 to $5,000 account, honestly, don't worry about Bitcoin and Ethereum. You're too small to make a significant bet in those that's going to pay off. And yes, I know there are quite a lot of people who think that Bitcoin's going to be $1 million a coin and that Bitcoin is going to be the future of money. And Godspeed to them. Like, honestly, to those guys who think that, I hope it comes off for you. Like Mad Max says, hope is a mistake. Like that is not, like, I hope Bitcoin goes to $1 million a coin. That's a hope. That's not a plan. There's absolutely nothing to suggest that will happen. There's a lot to suggest that could happen. How much are you willing to bet on it? A little bit. Not everything. If you are trading crypto in your 401k or in your superannuation account, or your retirement accounts, wherever you are, you should definitely hold some Bitcoin and Ethereum. They are crypto exposure that's safer than other cryptos. If you fail to sell out at the top of this cycle and you wait for the next cycle, Bitcoin and Ethereum will certainly be around. Probably. Definitely Bitcoin, maybe Ethereum. Definitely Bitcoin, probably, almost certainly Ethereum. Those other things, will they almost certainly be around? Gee, I don't know. That is not a bet that I would want to take. You don't want to be holding Aptos past the highs into the next cycle, or Orbs, or like any of the AMB or Leave or any of the garbage we're trading now. You don't want to be holding that into the next cycle. But if you're holding superannuation long term, well, some Bitcoin in the long term, that's a perfectly reasonable bet. Okay, so how are we going to do this? We're going to split our things up into buckets. So bucket one is the most conservative. It's Bitcoin and Ethereum. Now, if you don't know how to allocate between Bitcoin and Ethereum, really, I recommend halvesies is a perfectly reasonable way. There is more technically elegant ways. Technically, you would want to an inverse of the ratio of standard deviation, but why bother? So our next bucket is what we call established coins, most likely above $1 billion market cap, but that's a bit flexible. So we're looking at the things that are big coins. We're looking at Sol, Link, DYDX, INGA, Matic, AVAX, Polkadot, Phil, ADA, Bitcoin Cash. We're looking at the coin market cap top 100. So if we just go down through the list of top 100 coins, BNB, XRP, Solana, Cardano, Doge, TRX. I mean, there's some dogs in here, and there's some winners, but these are big things, right? So our next bucket is the established coins. Now we're going to get to the actual coin selection. How do I know that this coin is better than that coin? And pro tip, it's not I like the project. It's usually just this one has momentum. The next bucket, we're going to call these mid-cap coins. So these would be things a bit smaller. So examples are Roll Bitcoin, $700 million market cap. Femex Token, not out yet. Pendle, $400 million market cap. Orbs, $200 million market cap. Step Finance, Joe, Gal, Vulcan Forge, PYR, Yield Guild Gaming, Render, RNDR, stuff that you may have heard of in passing, but you probably don't know what it does. So we're going to get on to how do we choose these coins, but just think one level down in abstraction and utility from the things that everyone's heard of, the Bitcoins, the Ethereums, the Solanas, the Link, the ADA, XRP, like think one level down. And then we've got a last bucket, which is long shots. So most of those long shots are going to be things you haven't heard of. They're going to be $20 million or smaller market cap. Most of them probably won't be listed on big exchanges like Binance. Most of them, some of them, you'll have to buy on Uniswap and PancakeSwap and things like that. And that's not a bad thing. Some of the biggest winners come from these long shots. Okay, so we're getting 4 buckets of things, and we're going to intentionally decide how much to allocate to each bucket. We're not going to randomly choose it. So Bitcoin and Ethereum, if you're a small account, you want nothing, because you got a $1,000 account, you can't really afford to be putting some in Bitcoin, and it's not going to be a meaningful win. If you've got a really large account, I would say about 25% is right. If you're more conservative, you could make that higher. If you're older, if you're in your 70s, you should probably make that higher. The next bucket of large cap coins, the Solanas, the Links, the ADAs, the XRPs, the things like that, the BNBs, 30 to 50% depending. The mid caps, 30 to 50% depending. And the long shot bets, between 0 and 10%, depending on how exposed you want to be to them. Now, long shot bets are exactly as advertised. There are, a 1 in 20 shot that pays off at 100 to 1. Conceptually, if you think about that, if you have 5 bets, and they're all a 1 in 20, and they're all a 1 in 20 chance, you have a pretty reasonable shot of having one of them pay off. Is it gonna meaningfully move the needle? A little bit, but not huge. You don't want to be positioned so that you need these microcap bets to pay off. So let's do some examples. So let's say you've got $1,000 to trade, and that's like money that you don't care if you never see it again. In your mind, you've kissed goodbye to it. You can afford to be riskier than what someone sensible would say. So in this, we put nothing to Bitcoin. We're going to go a third between large, mid, and micro caps. And so what would that look like? We're going to go a third. So let's do a different account where it's a more substantial account. So this is a $100,000 account. We can't afford to fuck up 100 grand. Like no one wants to like tell the wife, oh, I just lost 100 grand of our savings. Like, get the fuck out of here, dude. You're sleeping on the couch. So let's work out how this would go. So we've got a $100,000 account. We've got 25% in Bitcoin and Ethereum, 12.5% each. So these are our biggest positions. This is probably as it should be. If you've got a $100,000 account, Bitcoin and Ethereum should be your biggest positions. Your large cap coins. And so here we've got 5 coins in our large cap list. These are 5 that I like. You probably like different coins. That probably doesn't matter. And we probably don't have a basis for saying the coins that I like are a higher probability of going up than the coins that you like. Even though it feels like I'm a smart guy and I work really hard at this, I probably have my finger on the pulse better than most. It's drawing a long bow to say that I can pick coins better than you. It really is. And that should be embarrassing to say, but it's the truth. So our large cap coins, what do we have here? We've got Solana, Link, DYDX, Matix, and AVAX. And these are all 7% each. I mean, is Solana, Link, DYDX, Matic, and AVAX better than XRP, ADA, BNB. What else could I choose? Uniswap and Monero. My opinion it is, your opinion might be different. So what we're trying to do here is pick 5 representative large cap coins. Ideally, what would we like? We'd like a mix of things that are layer ones, that have some exposure to DeFi, that are all a little bit different. Ideally, doesn't have to be that way. And then we move on to our mid-cap coins. Now, again, this is where you've got the choice of hundreds. So my top 5, I mean, I struggle to get it to top 5, but my point here is that you want to get it to about 5. You don't want 100 coins that you like, because 100 coins is going to be unwieldy to manage. It's going to be unwieldy to keep track of. It's not, and more importantly, it's going to diminish the results of any good luck you have. So you have 50 mid-cap coins and one of them does 100x. It's just one of 50. It's another bum in the shower. You really want to keep it small so that, for example, here, our mid-cap coins, Woo, Femex Token, Roll Bitcoin, FIL, and INJ. I mean, I think all of those are pretty reasonable shots to be a breakout, 50x win. I think they're all a reasonable shot at that. Am I certain? No. Am I reasonably certain that at least one of them will get that? Yeah, I'll back those odds. And our last bit should be really a bit of an afterthought, which is the microcap coins. And I'm not going to allocate those next. You're never, ever going to get anywhere close to certainty with microcap coins. The idea is that you're betting well ahead of a hype wave. You're betting basically just on the people in the community and the story that they're giving you. And we all know that we're all suckers for a good story. These bets want to be very small. So if you had 10% of your account and you had it on 5 bets, 2% each would be about right. For example, a coin that someone shilled me the other day was called Toshi, Toshi. I don't know anything about the coin. I trust my bro. He's red hot on it. I threw $1,000 into it. That's about right. That's kind of the thinking here. And what if you like different coins? What if you think that one of those coins that mentioned is a scam and you don't like it? It probably doesn't matter much. If my ability to pick coins better than you is going to be the difference between winning and losing, we're all fucked. Don't worry about it. In a bull market, everything that doesn't blow up goes up. This is really important. I want you to understand it. Pick any random coin. And I'll show you one that I was red hot on in 2017. I was so red hot on this in 2017. It made $200, started out at 20 cents or something like that. Like, it was a ridiculous win. It went all the way down to like $3, $4 from $200. It went all the way back up to 135. I mean, these things swing so wildly, just so unbelievably wildly. If it doesn't blow up, it's going to go up. So in one bull market, this is a failed coin, went from $3 back up to 150, back down to, where is it recently? $7, $140, 70, and look at where we are now. We're at $10. Everything that doesn't blow up goes up. So what we're doing here is we're balancing diversification with concentration. If you have more coins, a single bad pick Doesn't hurt you much. If you have more coins, a single good pick doesn't help you much. Fewer coins, a good pick has more impact. So let's look at this $100,000 account example again. We've got 13 coins in total. Now, this is enough diversification that we can be reasonably certain that even if our coin picking ability sucks, and like even if we completely suck at this, we're probably going to do okay. And if we redid this with a really small account, we'd probably take out the Bitcoin and Ethereum, and we'd probably allocate more to mid caps and less to Solana, and probably a little bit more to micro caps. That's basically it. You know, we're taking a very, very simple plan. We're going to move on to it in the next videos. We're going to choose the coins, and I'm going to show you a very simple method of choosing coins that doesn't rely on like, I like this token, I like that team, none of that, you know, bullshit that people go on with. That's a bit more systematic. And we're going to use the primary thing that makes coins go up, which is momentum. You strip all the bullshit out of it. Everyone loves a winner. Coin starts going up, it's probably going to continue to go up. And that's the phenomenon that is most reliable and most predictable in crypto markets. That's how we're going to choose our coins, with a few wrinkles. We're also going to talk about how do we exit these positions? How do we get out of these positions? And we're going to use the two main tools that we have, which are reliable. One, momentum, thing that starts going up will probably continue going up until it starts going down. And then once it starts going down, it's probably going to continue to go down. So we're going to use two things. The first thing is momentum. The next thing is sentiment. These are the momentum and sentiment are probably the only two real things, well, and carry, that we can count on. And what sentiment can we count on? When people hate a thing, it's undervalued. When people fucking love it, they're probably paying too much. When sentiment gets red hot, we're going to look to get out. When sentiment is terrible, we're going to look to get back in. That's how and when momentum is strong, we're going to hold our positions. When momentum turns and changes to be downside momentum, we're going to get out. Pretty simple. How do we add new coins to this mix? So, you know, we're taking a snapshot in time today where we might have to, there's a new coin coming out, ZRO. I want to be in on that coin. How do I adjust my portfolio for that? We got a method for that. How do we rebalance it? So halfway through this, if you have a position in NEO, for example, you had 10 coins and you bought NEO at $15. NEO goes to $130. You've got a 10x on your hands. But this position was 10% of your portfolio. Now it's probably 50% of your portfolio. And now, if it's 50% of your portfolio and it goes from $140 back down to $10 again, then you're fucked. So we need a plan to deal with this, and rebalancing is how we deal with it. And the last thing, what happens at the end of the bull? So this is the market cap of everything except for Bitcoin and Ethereum. You don't really want to have anything to do with the market from about here to here. You really, if you were a smart man, you didn't want anything to do with the crypto market, probably from about here to really about today. You could just like switch your screens off, have a cup of fuck right off, and just ignore this and just get back in the pool right here, or right where we are now, which is why we're doing this, right? Like, why are we talking about this right now? Why are we talking about a simple plan? Because now is the right time. This is the right time to do this. But we also need a plan for getting out of everything at the end of the bull market. So I'll see you in the next videos. Hope you enjoyed it.